So welcome to November 2020 RTP. So as usual, this is where I think the method of MCQ questions got changed. So this also has about 13 questions, 14 questions for us to look at, 15 questions for us to look at. Let's look at all of the question, including the first case study MCQ. I'll put this for you to refer. I hope you are able to download and then view the RTP. Let's start with our case study MCQ. PTL Private Limited. Oh, here, when we are reading, what we will do is that we will do the opposite approach. We want to know. So it's a lot of bigger MCQs. Let's look at the case study itself first. When we are looking at this, always try to underline what is important for us. PTL Private Limited. I'm hoping you're reading together with me. PTL Private Limited is a retail store of merchandise located in 25 states and or union territories in the country. So it's the retail store of merchandise. For the purpose of clearance of stock of merchandise and to attract more customers, PTL Private Limited launched a scheme of buy one get one free. There's a there was a circular 92 2019 which came in, which was talking about sales promotion schemes. It was talking about buy one get one free. It was also talking about gift and free sample. It was talking about volume based discount, post supply discount, all of it. So they're trying to test you with that. For the same type of merchandise, for instance, one shirt to be given free with the purchase of one shirt. Buy one get one free. You'll have to now, your brain should actually think about what is the GST implication on buy one get one free kind of a model. For saving the cost, PTL Private Limited directly purchases the merchandise from the manufacturers. All right. In the month of May, in order to save employee cost, PTL Private Limited purchased a tempo traveler worth 12 lakh with seating capacity of 25 persons including driver for transportation of its employees. Further, for ensuring that the well-being of its employees, okay, PTL Private Limited voluntarily obtained health insurance of 2 lakh for each employee in the same month. Premium of 1500 per employee has been paid by the company for 100 employees. They have paid 1500 as insurance premium. Not a statutory obligation, it's a voluntary measure. In the month of July, Mr. Raghav, a customer of the company, filed a lawsuit in the court against the company for not supplying the goods of value of 1 lakh. PTL Private Limited engaged Mr. Ram, an advocate, to represent in the court for agreed consideration of 25,000. So Mr. Ram, an advocate, provided services to PTL Private Limited. So you have to think about what happens when an advocate providing services to a registered person. As per the terms of the contract, Mr. Ram issued an invoice on 5th July. However, consideration was not paid till February next year. It's also very interesting. Trying to look at the exemptions in that particular cases. All amount given are excluding taxes, and all transactions are intrastate transactions. Rate of taxes are CGST 9%, SGST 9%. However, for tempo traveler, the rates of GST is 14% and 14%. All right. In relation to the above, Answer the following questions. There are three questions that they have in this particular case. Question number one. With respect to buy one get one offer, which of the following statement is true? It will not be considered as supply at all since there is no consideration is involved in one of the items. Is that correct? It's not correct. It's not correct. Reason, it is like supply of two items for a single price. Okay. So it is definitely a supply of two items. B. Supply of items for which consideration is charged is a supply under section 7, while supply for the other item is free of cost is not a supply. Is that correct? No. It is not considered like one item is supplied with consideration, other item is supplied without consideration. No. It is considered to be supply of two items for single consideration. C. These are two individual supplies where single price is charged for the entire supply. Since single price is charged, the same will be always taxed as a mixed supply. Is it necessary that it will be always taxed as a mixed supply? Not necessarily. If it is naturally bundled, what supply it will become? I'm supplying two items. And if it is naturally bundled, it will become composite supply. So this statement also I don't completely agree. Now let's look at the last statement. It has to be correct, okay? Because all other statement we have disagreed. Otherwise, we are in trouble. So D, there are two individual supplies where a single price is charged for the entire supply. So these are two individual supplies for a single price is charged for the entire supply. Their liability, their taxability will depend upon whether the supply is composite supply or mixed supply. Happa. So this is the correct statement. So D will be the correct answer. That's the clarification that we have in circular 90. Clear, everyone? The second one, eligible input tax credit for the month of May. How much will be the ITC that is eligible? On purchase of tempo traveler. Second, on health insurance premium paid, assuming all other conditions for availing input tax credit has been complied with. Which of these purchases are eligible for ITC? Is tempo traveler an eligible purchase? Yes. Is the health insurance premium an eligible purchase? No. So tempo traveler, why is it eligible purchase? Because tempo traveler is for how much capacity? 25%. More than 13% it is not blocked. So there whereby I can take credit. So on 12 lakhs, 14% is the tempo traveler rate is what they have said. Okay, tempo traveler rate is 14% and 14%. So how much will be the tax on 12 lakhs? 14%. 168, 168. On premium, it can be taken as ITC only if it is a statutory obligation. It's not a statutory obligation, so it is blocked under section 17(5)(b). So B is the correct answer. 168, 168. In second case, it is nil and nil. Third one. Okay, let's look at the third question. Which of the following statement is true in respect of services of advocate availed by the company? Option A, CGST 2250, SGST 2250 on advocate services are payable by PTL Private Limited. ITC availed thereon is to be added to its output tax liability with interest as consideration along with taxes not paid with 180 days of issuance of invoice. The first part, is it taxable under reverse charge mechanism? Yes, that is correct. But if the tax is payable under reverse charge mechanism, is that 180 days payment condition required? That 180 days payment condition required? No. So that's an exception to 180 days payment condition. There are three exceptions that we have. One is like tax is payable under RCM. So if it is payable directly by the recipient, then it is not applicable. Okay. Second case, when it is a supply without consideration. Third case, when it is an amount that is paid to a third party and it was added to the value under section 15 2B. So there are three exceptions that we had. So it is actually testing on that specific point. Okay. So, second case, the GST, SGST is payable by Mr. Ram. No, no, it is payable by PTL Private Limited only. So, this is also not correct. C. CGST and SGST on advocate services are payable by PTL Private Limited. Correct. Conditions for payment of consideration along with tax within 180 days does not apply in the given case. Is it correct? Yes. So, C is the correct answer. So it's little tricky. So always remember that whenever reverse charge case comes in, for you to take ITC, there is no need to satisfy that 180 days condition. Second question. Okay, again one more case study. Okay, let's go ahead and then read it. Mr. Kumar started interior designing practice from the month of January. His turnover to the month of March was he started in Jan. March was like 12 lakh 50,000. On 30th of June, his turnover exceeded 20 lakhs and reached to 20 lakh 5,000. Mr. Kumar applied for GST registration as a regular taxpayer on 15th July. The registration was granted to him on 25th July. He applied on 15th July, which means he applied from the date he is liable. He was liable on 30th of June. Within 30 days, he has applied. He got the registration on 25th of July. On 16th July, he entered into a contract of designing the flat of Mr. Shyam. The service was completed on 22nd July and Mr. Kumar issued invoice on the same day for 6 lakh. Okay, on 16th July, he had provided some kind of a contract, which means at that time, whether he has GST number, in which case, in the above case, when will he get GST number? Turnover exceeded 20 lakhs, but he applied the registration only on 15th July, which is within 30 days. All right. But his registration he got only on 25th of July. When will he get GST number? Only when he gets a registration certificate on 25th of July. So till then, he does not have GST number. So there is some document that is relevant and all that. Okay, leave it. Let's not breaking the suspense. Let's go ahead and then read the question. Okay, so he has entered on 16 July. He does not have GST number at that time. He entered into a contract of designing a flat. Service was completed on 22nd July. Okay. Mr. Kumar issued invoice on the same day. So 22nd July also he does not have GST number. So he issued a normal invoice for 6 lakh. On 5th July, Mr. Kumar purchased capital goods amounting to 4 lakh 50,000. He had purchased some capital goods. At the time when he was purchasing capital goods on 5th July, he has not even applied for registration. And from 25th July to 31st July, he availed services amounting to 1,75,000 for the purpose of completing the service. So from 25th to 31st, he availed some services for 1,75,000. He has done so many things. On 1st August, he got another contract of interior designing from Mr. Ram, which he accepted on 2nd August. The service was completed on 6th August. An invoice was issued on 7th August. 2nd, 6th, and 7th. Payment was received on 29th August. So many information. So time of supply is also being tested here. All values are excluding taxes unless specifically mentioned. Mr. Kumar makes only intrastate outward supplies. All purchases are also intrastate. Rate of taxes are 9 and 9. Let's look at the answers to this 5 questions that comes apart from this. In relation to the above, answer the following question. First one, what is the effective date of registration of Mr. Kumar? How do I compute effective date of registration? Effective date of registration is depending upon whether I have applied for registration. From the time I'm liable for registration, within how many days I have to apply? 30 days. Very good. Within 30 days. If I apply within 30 days, what is my effective date of registration? The date on which I'm liable for registration, which means the date on which my turnover exceeded the limit. If I don't apply within 30 days, what is my effective date of registration? It will be date of grant of certificate of registration. Now let's go back to the paragraph and then try to understand. When was I liable for registration? 30th of June. Within how many days I have to apply for registration? 30 days. So June 30, before 30th of July I have to apply. Did I apply within 30 days? Yes. So what will be my effective date of registration? Date on which I am liable. When was I liable? 30th of June. So what is the correct answer? Which option is correct? 30th of June, 15th of July. Option A is correct, which is 30th of. Is it clear, everyone? Okay. So when your effective date of registration is 30th of June and you got certificate of registration only on 25th of July. So there is a period from 30th of June till 25th of July. You're making supply, but you don't have GST number. So what is that the provision says? Whatever supply you made between this period from effective date of registration till you getting the GST number, which is certificate of registration, whatever supply that you have made, you would have given normal invoice. But you have to revise those invoice and issue within next 30 days. From 25th onwards, next 30 days, within that particular period, you have to revise these invoices and issue again, and that will be called as revised tax invoice. So he can issue revised tax invoice till what date? 30 days from a grant of certificate of registration. So how do I compute that? So I will have time, okay, within 1 month from the grant of certificate of registration. So when did I get certificate of registration? 25th of July. So till what date I'll get this particular time? 25th of 25th of July. 1 month from there will be 25th of August. So I'll get time till 25th of August. Okay. So within next 1 month I have to issue that. So 25th of August will be the time I can issue all my revised tax invoice from 30th of June till 25th of July. Okay, then the question is, what is the eligible input tax credit available with Mr. Kumar for the month of July? How much will be the eligible ITC for Mr. Kumar? We'll have to see how much is the purchases that he has made and how much is the credit that he is eligible for. How much purchases that he has made with which month? July. Okay. Say in July, how many purchases he has? On 5th July, he purchased capital goods amounting to 4,50,000. Can he take ITC of that? Is he? Yes, his effective date of registration is 30th of June. After 30th of June, whatever purchases he makes, is he eligible for ITC? Yes, he is eligible for ITC. There is no question. What if he has purchased before 30th of June? He will be eligible for ITC only on his stock that is left, if at all there is some stock. But he is not eligible for any other ITC on any purchases that he has made before that. So, but he is registered from 30th of June. Whatever purchase he makes after that, he is eligible for ITC. So, on 4,50,000, he is eligible for ITC. Then, from 25th July to 31st July, he also availed services for 1,75,000. Can he take ITC on that? Yes. So, how much is the total purchase then? 4,50,000 plus 1,75,000. That makes it 6,25,000. How much is CGST? How much is SGST? All purchases are intrastate. So how much will be CGST? How much will be SGST? It will be 9%, 9%. So for 6,25,000 into 9% will be 62,500 minus 6,250. That will be 56,250. So 56,250 of CGST, 56,250 of SGST. So which is the correct option? Option C. Then fourth question. What is the time of supply of services provided by Mr. Kumar to Mr. Ram? There is a service that is done by Mr. Kumar. Kumar got another contract of interior designing from Mr. Ram. Okay. which he accepted on 2nd August, not relevant. Service was completed on 6th of August. Invoice was issued on 7th, payment on 29th. So which section is relevant here? Section 13.2, which is talking about time of supply in forward charge cases for supply of services. What is that the time of supply provision says? If you are issuing invoice within 30 days from the completion of services, then invoice and payment, whichever is earlier. If it's not, it will be completion and payment, whichever is earlier. Here, 6th is the date on which they have completed the service. When did they issue invoice? On 7th, which is within 30 days. So they have to compare 7th with the payment, 29th. What will be the time of supply? 7th will be the time of supply. So option A, 7th August is the correct answer. So suppose if instead of opting regular scheme, Mr. Kumar opts to pay tax under section 10(2)(a), what will be the tax liability for the month of July? What will be the tax liability for the month of July? What is the outward supply in July? July outward supply is 6 lakh. Yeah. Service was completed on 22nd July. Invoice was for 6 lakh. On 6 lakh, 3% each. How much will be that? 18,000. 18,000 is the correct answer. Clear, everyone? So far, whatever we have discussed. All right. Now the third question. During the month of May, Z Limited sold goods to Y Limited for 2,55,000 and charged GST at 18%. However, owing to some defect in the goods, Y Limited returned the goods by issuing debit note of 40,000 in the same month. Z Limited records the return of goods by issuing a credit note of 40,000 plus GST in the same month. In this situation, GST liability of Z Limited for the month of May will be how much? Is the question. How much will be the GST liability for the month of May? So what is the, see, sometimes what happens is that when we keep discussing RTP, you will find all questions new, like but generally RTP questions are new, and generally RTP questions are given for you to check your revision, how much you have revised and all that. Even if you're not getting RTP questions on first on no, if you're getting that answer on the first go, brilliant. There is nothing like that. Even if you're not getting, ICA expect you to just learn these questions. It's the new questions that I'm giving you. Compared to what questions there will be in your RTP and what will be there in your examination, examination will be much easier. Yeah. Except for those muddy and RTPs wherein they have not worked to get new questions. Okay. That's just the exception that we have. So in May, there is 2,55,000, 18% GST, and Y has returned 40,000. So Z records the return of 40,000 in the same month. So of course, 2,55,000 invoice value gets reduced by 40,000. So it will be 2,15,000, and on that 18% will be the GST. That will be the liability. So how much will be that? 2,15,000 into 18 percentage would be 38,700. So B is the correct answer. It's a very simple, straightforward question. Don't think every question would be complicated and twisted. Fourth question. C and Company, a registered supplier in Delhi, opted for composition levy under subsection 1 and 2 of section 10 of CGST Act 2017. It sold goods in the fourth quarter of a financial year for 15 lakhs exclusive of GST. The applicable GST rate on these goods were 12%. C and Company purchased goods from Ramesh and Company registered in Delhi for 9,55,000, on which Ramesh and Company charged CGST of 57,300, SGST of 57,300. C and Company had also purchased goods from E and Company registered in Haryana for 2,46,000, on which E and Company had charged IGST of 29,520. GST liability of C and Company for the fourth quarter of the financial year will be how much? The question. It's a straightforward question. So much of information is given. None of them are relevant. Just that you have to think. But all of these questions wherein you have to read aloud, no, it's all 2-mark MCQs, not just 1 mark. Composition levy scheme, if somebody opt for, how much will be the percentage of GST that they'll have to pay? If they are a manufacturer, it is 1% on turnover in a state. If they are traders, it is 1% or taxable turnover in a state. If they are restaurant, it is 5%. Can they make interstate supply? No. So when I say 1%, what will be the split of that? 0.5, 0.5 CGST, SGST. Correct. What is the first condition that they have? So there are so many conditions that they have to satisfy to take this. First condition is that they cannot get this 1% from the customer. What is the second condition? They cannot take ITC. If they have made purchases so much, they would have paid GST. Can they take ITC? No. So, do they have ITC eligibility here? They have purchased from Ramesh, they have purchased from Suresh, they purchased from Yandigo. Can they take ITC? No. So, what is their liability? On the turnover of 15 lakhs, 0.5 CGST, 0.5 SGST, they are not restaurants. So, 0.5, 0.5. How much will be that? 7,500, 7,500. That's it. Option A is the correct answer. They have given all other answers also. People will compute all. Then they realize, oh, composition levy. So don't get tricked by ICI. That's the only suggestion I have. Next. Mr. Raghu avails services from Mr. Raja, a chartered accountant, as under audit of financial accounts 55,000, tax audit and annual filing 10,000, income tax return filing of Raghu's wife, personal. Okay. So Raghu has even given Raghu's wife's income tax return also as Raghu's business expense. All the amounts are exclusive of taxes and applicable GST rate is 18%. The accountant of Mr. Raghu has booked the entire expense of 70,000. 55 plus 10 plus 5. 70,000 was booked as expenses. Okay. Raghu is eligible to take ITC of how much? How much ITC they can take? Amount is this. 5,000 is ineligible. Okay, because this is personal. The other two is business. They are eligible. So on 65,000, they are eligible for 18% ITC. How much will be that? 11,800. Answer will be B. TT Private Limited, registered in Rajasthan, furnished the following information for the month of June. Interstate sale of goods for rupees 1,25,000 to JJ Enterprises registered in Haryana. Okay. Interstate purchases of goods from XYZ company registered in Punjab for 40,000. Intrastate purchases of goods from RR traders registered in Rajasthan for 65,000. Applicable of GST rate is 18%. All amounts are exclusive of GST. GST liability payable in cash. What is their outward tax liability? This is outward supply. This is inward supply. This is inward supply. So how much is their outward tax liability? IGST of 18% on 1,25,000. How much is that? 22,500. How much is the ITC that is available? Interstate purchases 40,000. How much will be the ITC, IGST? 7,200. Then 65,000 they had purchases from Rajasthan, which is an intrastate purchase. So how much is the ITC of CGST, SGST? 5,850. 5,850. Correct. So can I reduce IGST of ITC of IGST 7,200? Yes. Can I reduce 5,850? Yes. Can I reduce 5,850 of SGST? Yes. All of that can be reduced because IGST IGST can be set off from IGST. EGST can be used for setting of IGST. SGST can also be used for setting of IGST. So how much is the net? 11,700 plus 200, 7,900 plus 7,000. So it is 18,900. 19,000, 18,900. So that's 3,600 is payable. IGST of 3,600 is the answer. Yeah, you don't have to. So for answering this particular question, you don't have to really think much, right? Because that's the only IGST. That's a very good observation, Faisal. You can also look at the answer and then understand. Because outward tax liability is IGST, so the net liability has to be IGST. Then, seventh question. Pradeep Traders registered in Haryana sold goods for 2,05,000 to Balram Private Limited, registered in Uttar Pradesh. GST is leviable at 5% on the said goods. As per the terms of the sale contract, Pradeep Traders has to deliver the goods at the factory of Balram Private Limited. For this purpose, Pradeep Traders has charged freight of 2,400 from Balram Private Limited. GST is leviable at 12% on freight. What would be the net GST liability to be paid in cash in case assuming that the amounts given are exclusive of GST? An interesting question. Look at this particular question. So this question is basically testing you on the rates only. Okay, just on the rates. Yes, this is 15.2C. Or we can say that this is basically a question wherein they are trying to test you with. Okay, so it cannot be C because it has to be IGST first of all. It's just testing you on the rate. Say I'm giving you. I'll see. It's a bit confusing when you look at this. I'll make it a chart. Okay, so that you will understand it. This is Pradeep Traders. They are giving goods to Balram Private Limited. What is their contract? What is that Pradeep Traders has agreed on? Is it an ex factory contract or is it an free on road contract? A for contract or ex factory? Is Pradeep Traders telling that I'll give the contract, you can come and collect it? Or Pradeep is saying that I'll deliver the goods in the factory of Balram itself? Is delivery part of this contract? It's an F4 contract. It is not ex factory. Ex factory means that Balram Private Limited has to come and pick it up. What is that the provision says here? As per the terms of sale contract, Pradeep Traders has to deliver the goods at the factory of Balram Limited for this purpose. These are all there in our notes. Okay, so only thing that you have to do is to read the notes. the box that we had notes, and I've mentioned that. See, delivery at the buyer premise, wherein supplier arranges for transportation and insurance as a part of the contract, will be a composite supply. It is called as FOR contract. Goods plus delivery plus transit insurance. Principal supply would be goods. Value of freight and transit insurance should be added to the value of goods. Already discussed there. Okay, anyway. So let's come back. So this is an FOR contract wherein Pradeep saying that I'll get you the goods at your factory. Okay. When you have an F4 contract, there is a clarification which we have to understand. The delivery charges and goods value, both of them are being collected from the customer. So how much is the delivery charge collected from the customer here? 2,400. So delivery is a separate transaction which is charged at 12% of GST. If delivery is separately done, it is charged at 12% of GST. That's what the question says. But what you have to understand here is that delivery and supply of goods here will be considered to be what supply? Composite supply. So the delivery, section 8, correct, composite supply. So the delivery will be subject to what rate? Will it be subject to the rate of the goods, or will it be subject to the rate of delivery charges, ancillary service rate? Or when the supply is a composite supply, it will be subject to GST in what rate? Will be subject to GST in what rate? Not high rate. It will be subject to GST in the rate of principal supply. Here, what is the principal supply? It will be supply of goods. So what you have to understand, when I am somebody who is giving goods, I'm also giving you delivery services. I'm giving you goods, I'm also giving you delivery services. Then you have to understand that the entire supply will be taxed in the rate of goods. Correct? So what is the rate of goods applicable here? 5%. So the entire supply of 2,05,000 and 2,400 will be subject to 5%. So what will be the GST that is payable? 2,05,000 plus 2,400 will be 2,07,400 into 5% will be how much? 10,370. Both of them are in different state or same state? Different state. This is in Haryana, this fellow is in Uttar Pradesh. So IGST of 10,370 will be applicable. Are you guys understanding this? Some clarity? Next question. Prem and Sons had taken GST registration on 1st January but failed to furnish GST returns for the next 6 months. Owing to this, the proper officer cancelled its registration on 25th July, served the order for cancellation of registration on 31st July. Now, Prem and Sons wants to revoke the cancellation for registration. Prem and Sons can file the application for revocation of cancellation of registration on or before what date? Revocation can be filed from order of cancellation within next 30 days. But now we have an amendment here. If this question has an approval from commissioner, joint commissioner and all that, it can be further extended. For the time being, it will be 30 days general deadline. It is not 90 days, it is 30 days plus joint or additional commission another 30 days, then commissioner another 30 days. So it has to be that separate. Okay. You will not get directly how much I'll get? 30 days. Generally 30 days. So if you add 30 days from 31st July, it will be 30th of August. So what's the correct answer? 30th of August will be the correct answer. Question number 9. XX registered in Delhi purchased books from PC traders registered in Uttar Pradesh. Books are exempt from GST. XX arranged transportation of these books from the Goods Transportation Agency, which charged a freight of 9,000 for the same. GST is payable at 5% on such GTA services. Which of the following statement is correct in the given context? GST of rupees 450 is payable by XX on reverse charge basis. Supply of goods and supply of GST service is a composite supply, wherein the supply of goods is a principal supply. Since principal supply is exempt, no tax is payable on freight. See, you have to be very careful about this particular understanding. Okay, see, since exempt goods are being transported, services provided by GTA for transporting the same is also exempt. GST of 450 is payable by GTA. See, XX registered in Delhi. They purchased goods from PC traders. Books are exempt. Who arranged for the transportation? Supplier or recipient? I purchased goods. Recipient has arranged for transportation. Now, is it an FOR contract? Is that the suppliers? No, it's ex factory contract. Correct. Very good, guys. It's ex factory contract. So this is something that I am separately having a contract for purchasing this particular goods. So if I'm registered, I'm a specified person. If I take services from GTA and GTA is not opted for forward charge because it's 5% applicable. So it will be taxed under what charge? Reverse charge. So 450 will be payable by on 9,000 5%, which is 450 will be payable by XX. So what's the correct answer? A is the correct answer. So are you able to properly differentiate between this question and the previous question? All right, good. Question number 10. Salim and Associates made an application for cancellation of GST registration in the month of March due to closure of its business. Its application for cancellation of GST registration was approved on 14 September. In the given case, Salim and Associates is A. Required to file final return on or before 13 December. Not required to file final return. Required to file final return on or before 30th September. Before 14th of December. Within how many days? How many months? Final return? 3 months. Final return needs to be submitted within 3 months. Correct. Within 3 months is the time limit that I have. So 3 months from what date? From the date of cancellation or order of cancellation, whichever is later. Application was given in March, but order came in September 14th. So which date I have to start from computing this 3 months? September 14. September 14, 3 months. October 14, November 14, December 14. So which option is correct? Option D is correct. December 14. So always remember, when there is cancellation, you have to take whichever is later. Okay, so your MCQ questions are over. Now we'll have to look at other type of questions. We have to be quick. Babla and Bros is exclusively engaged in making exempt supply of goods and is thus not registered under GST. On 1st October, the exemption available for its goods gets withdrawn. On that day, the turnover of Babla and Bros was 50 lakhs. Examine eligibility of Babla and Bros for availing ITC, if any. Babla and Bros was not registered. Why? Because they were making exempt supply. On 1st October, exemption got withdrawn. But at that time, his turnover was already exceeding the aggregate turnover that is required for registration. So he is taking registration. So can he avail ITC on the stock and capital goods? So you'll have to understand that somebody who's not registered taking registration, okay, and somebody who's registered making exempt supply and that supply becoming taxable are different. Again, I'll repeat, somebody not having registration, taking registration is different from a registered person who is making exempt supply is now becoming taxable supply. Babla and Bros comes under unregistered person taking registration or a registered person's exempt supply becoming taxable supply. This fellow comes under unregistered person taking registration. So section 18 is what they are testing here. So when an unregistered person is taking registration, they can take ITC on inputs lying in stock as raw material, work in progress, and finished goods on the last day before taking registration. They can take ITC. On capital goods, they cannot take ITC. Okay, this is the understanding. Mamta sales traders. B. Question B. Mamata sales trades in exempt goods and provides taxable services. It is registered under GST. On 1st October, the exemption available. See, this is a person who's registered. So Babla and Bros, which is the part A of the question, and Mamta sales are two different persons. That fellows who are making exempt supply not registered. This fellow is making exempted and taxable, so they are registered. Okay. Now on 1st October, exemption available to the goods gets withdrawn. Analyze the scenario and determine eligibility of ITC on Mamta sales. on inputs or capital goods. Can they take ITC on inputs? Yes, they can take goods. Inputs, ITC, they can take. On capital goods, can they take ITC? Yes, after reducing 5 percentage as per Rule 40 per quarter or part. Yeah, this is how you can do it. So is it completely clear for you in option A and option B? Both of the treatment are different. Babla and Bros, unregistered to registered. Mamta says a registered person who's taxable, exempt supply becoming taxable supply. Both of these cases, they are now eligible on the stock. They would not have taken ITC. Now they can take ITC. For unregistered to registered, capital goods, no ITC. But and registered person exempted to taxable capital goods, they can take ITC, but for the period where they were not eligible, they'll have to reduce 5% per quarter or part. Question number 12. Suhasini is a registered software consultant. On account of her ill health, she could not provide any services during the month of October. However, she had to incur all the expenses relating to her office. She paid 75,000 to various vendors. Total GST involved in goods and services procured is 13,500. Out of the total bills paid by her, one bill of 15,000 relating to security services availed for security of her office, tax on which is payable under reverse charge. GST on such bill is 2,700. Suhasini is of the opinion that for the month of October, no GST is payable on electronic cash ledger as she has sufficient balance of ITC for the payment of GST under reverse charge on security services. Do you think Suhasini is right? Explain with reason. Can she pay this 2,700 of tax payable under RCM by utilizing ITC that she has? No. The tax payable under reverse charge mechanism cannot be paid by utilizing ITC. It can only be paid by utilizing which ledger? Electronic cash ledger. Yes. But after making that payment, can I take ITC on the tax paid under reverse charge as well? Yes, I can do that. Question number 13. Question number 13 is a computational question. Okay, we can quickly look at each of the scenario and then I'll show you the answer. That will be the easier method to finish it on time. So XY of Kolkata is engaged in supply of various goods and services. It pays GST under regular scheme. Following information is provided for July. So they have given payments and receipts. Now let's look at the receipts. Interstate supply of office stationery 2 lakh. Intrastate supply of 500 combi packs containing one calculator and one diary. What supply is this? One calculator and one diary combo. It's a mixed supply. So what rate will be applicable on mixed supply as per section 8? The higher rate should be applied on this 4 lakh on calculator and diary, which is a higher rate that which should be applied. Calculator and diary is priced at 800. Calculator and diary are individually priced at 700 and 200 respectively. Okay. What is the rate for calculator? What is the rate for diary? Calculators, office stationery and calculators are taxed at 99, but diary is taxed at 14%. So the entire 4 lakh will be taxed at 14% and 14%. This will be at 9% and 9. No, this is 18%. It's an interstate supply. 18% IGS. Then intrastate supply of services of business correspondent to Subvidhi Bank with respect to the account in its urban area branch. Urban area branch, is it taxable or it's not taxable? Business correspondent services to a bank, it is taxable. What is not taxable? Business correspondent services to a bank or a rural area branch. So this is also taxable. It's an interstate supply, intrastate supply. So it's taxed at 9% and 9%. Okay. So how much will be my outward tax liability on this 2 lakh? We can do it here itself. I'm too lazy to do the other way around because it'll take a lot of time. So I'm just trying to give you this understanding interstate. So I'll have 36,000 here. 4 lakh. So 14% will be how much? It will be 40,000 plus 16,000, right? 56,000. 9% and 9%. The total would be 65, 65, 36. Okay. So this is my outward tax liability. Now I have to look at ITC. I've made interstate purchase of stationery for 1,40,000. So what credit would I have? It will be 18 percentage IGST. I'll have credit. So how much will be that? Okay, so I'll have to look at, is there any I think there's something that is missing. So let's look at this question. There is third point which says an invoice of 40,000 towards purchase of office stationery is missing and no other tax document is available. So on this 1,40,000, 40,000 worth invoice is missing. So how much I can take ITC? Only on 1 lakh. So 18,000, 18 percentage would be 18,000. Then repairing of lorry used to transport goods from warehouse to the clients, intrastate supply. Can I take ITC on that? Repairing of goods meant for transportation of goods, not blocked because it's lorry. I can take credit 18 percentage, 9,000, 9,000. So I have 18,000 IGST credit, 9,000 CGST, 9,000 HGST. So 10 percentage of, okay, so additional information, 10 percentage of interstate supply of office stationery is made to unregistered person. Is it relevant? My supply is to unregistered customer. Is it still taxable? Yes. That is what is relevant. When if I made purchases from an unregistered person, then I will not be paying GST and all that. So this is sale to an unregistered person. So there is nothing that I have to understand here. Combi pack we have already understood. So I have to still apply the higher rate. All figures mentioned are exclusive of taxes. So I have to compute the net GST. So there is an opening credit also 5,000, 5,000, 80,000. So let's look at the answers and then look at this. So what is that we have got? 65, 65, 36. I have brought forward ITC of 5,000, 5,000, 80,000. Office stationery out of 1,40,000, 40,000 was actually 40,000 was actually invoice missing. So I cannot take ITC 16(2)(a), which says that you should be in possession of invoice. So 18,000 only I can take. Then repairing I can take ITC. I have to put a working note on that. So 14,000, 14,000, 98,000. Now how do I do the set off? I don't. Do I have an RCM cases here? No, we don't have an RCM case here. No. So sometimes we can have an RCM case on this ITC. So there we will have to add back in the end after computing net GST. So this question does not have that. So what is the first set off I have to do? First set off would be an IGST. IGST credit is how much? 98,000. I will set off against IGST, which is 36,000. I'll set off. I still have extra credit available. Now this extra credit I can set off against CGST or SGST in any order. Is there any benefit that I'll get? No, because I have the same credit of CGST and SGST available, 14,000, 14,000. So I can either set off equally or I can give full in CGST and other in IGST. So my net GST for 65, 65, 36 I have set off. Then balance IGST I have set off 11,000 here and 51,000 in SGST. So my 14, 14, 14 I have set off otherwise. So 40,000 is my net GST payable of CGST, or I can get 20,000 CGST, 20,000 SGST if I have given equally the balance. Okay. So 31, 31 if I have given, I would have got 20,000, 20,000. So total minimum liability, if it is reaching at 40,000, your answer is correct. Then the working notes also you'll have to refer. Nothing new that I have to add in terms of that. Now let's look at the other question. Question number 14. We'll have to be quick in understanding. This is an easier question, an exemption based question. So we will try to understand this. Multi-services private limited. They themselves is starting with the name multi-service. I have so many services because you have to answer all of this. Okay. Multi-service private limited. registered in Punjab is engaged in supply of variety of services. Turnover is 35 lakhs in the preceding financial year, which means that the turnover exceeds the threshold limit in the preceding financial year. It provided following information for the month of April. A fee for coaching provided to students for competitive exam. The coaching center is run by Multi-Service Private Limited in Punjab. Is it taxable or exempt? Private tuition. It is taxable. Receipts for services provided in relation to conduct of examination in Purity University, Delhi, providing education recognized by Indian law. Okay. Conduct of examination, if it is provided to, there are three educational institutions that is listed in GST. First one is school from preschool till higher secondary. Second one, universities, okay, for curriculum recognized by any law. Third one, vocational training institutes, ITI, ITC. In this particular case, we are talking about services provided to them. Okay. Conduct of examination, any services relating to admission or conduct of examination, if it is provided to any of these education institutions, it is exempt. That is the provision that we have. So this 19,200, will it be exempted or taxable? It is exempted. Then amount received for transportation of students and faculty from residence to Lotus Public School, a higher secondary school. So transportation of students, staff, faculty to school alone is exempt, not the other two category of education institution. So this is to school, this is also exempt. The amount received for providing security and housekeeping services to Dani Public School. Security and housekeeping services. Security and housekeeping services for the school, inside the school. Okay, that is exempted. So this is also exempt. So only the first one is taxable. Clear? The last question in this particular November 2020 RTP would be the due date of payment of tax by a person paying tax under Section 10 Composition Levy Scheme is aligned with the due date of return to be filed by the said person. Discuss the correctness of the statement. What is the return that needs to be filed by a person who is under Composition Levy Scheme? RMP. Composition Levy Scheme. No. CMP 08 is a statement. What is the return that they have to file? The return is GSTR 4. The return will have, the form will be having the name R inside it, GST return. Okay, so CMP 08, which is having P in the end, which means it is a payment statement. You have P in the end, CMP, composition payment statement. Return will have GST R inside it. Okay, so the return actually is a financial year return, but your payment is quarterly. So the statement is not correct. It is not due date of return and your payment is not aligned. You have to make the payment on quarterly basis using the statement CMP 08, and your return needs to be filed on a financial year basis. What is the due date of GSTR 4? 30th of April next financial year. Very good. So that concludes our discussion on November 20 RTP as well.